are going to be assessing how we make Africa's financial services more cyber resilient. I'm your moderator, Nanjira Sambuli, and I'll be introducing the panelists shortly. Digital financial services have become essential for strengthening financial inclusion worldwide. In Africa, there are thousands of financial institutions responsible for managing the assets of about 250 to 300 million customers. But with multiplicity of critical cyber incidents happening that could hamper development of the sector, and especially where financial inclusion comes in its effort to fight poverty, we have to ask ourselves how cyber resilience of the financial sector can be made a prerequisite to the development of a safe and responsible financial inclusion ecosystem and securing the rapid development of FinTechs, financial services, and financial inclusion services. If we could please ask the doors to be shut so we can continue. Thank you so much. If we could please have the doors closed so we can continue the session. Thank you. So we're going to have a conversation here, and with your participation, hopefully, on what are some of the barriers to overcome, how we could strengthen cooperation and information sharing between different stakeholders, and what are the lessons from the financial services that are relevant or could be leveraged for the other sectors. But before we do that, let me just quickly introduce my panelists here. To my immediate left, we have Brett DeWitt. I hope I got that right, by the way. He's the Vice President of Global Cybersecurity and Technology Policy at MasterCard. Next to him is Laura Temesi, who's the Head of Cyber Partnerships and Government Engagement at Standard Chartered Bank in Kenya. And next to him, we have Marc Coulibaly from Banque Nationale d'Investissement in Côte d'Ivoire. And last but not least, we have Jean-Louis Perrier, who's the Africa Cybersecurity Resource Centre Program Director. Thank you for joining us this afternoon. Let me start with just asking for your perspectives on this question about what's the lay of the land with our digital financial services in Africa. Let me come to you, Laura, first. With the perspective of a multinational bank with a footprint in Africa, what are you seeing as some of the issues that are emerging at the nexus of financial services and their digitization as so far as cyber security and cyber resilience go? Yeah, I think you have a mic next to you there, to your right.
Thanks a lot, Nanjira. I think digital financial inclusion is something that has been an agenda that's being driven quite vigorously over the last 5 years in the continent, in Africa. And one of the things that is worth noting is that for some regions in Africa, a lot of that financial inclusion is being driven through mobile banking platforms and your non-traditional platforms that you see being the key driver in other regions, like in Europe and in America. So it's not really card-driven, it's more mobile-driven. As a result, we have many banks integrating and financial institutions, savings and credit corporations, integrating with the mobile banking service providers, making them actually part of our critical infrastructure as countries. But one of the big barriers that I see that is getting in the way is how are we addressing challenges that the consumer experiences, then SIM swaps, and as a result, unauthorized access to funds. Many times organizations look at it internally and they look at how can I protect myself, how can I confirm that I did the right thing and the responsibility was with the client, rather than truly living to the fundamental principle of consumer protection. How do I protect my consumer and give them comfort that this channel is safe and that if anything goes wrong, there is recourse for them? So that's a very big barrier because it touches on the trust element. Because obviously, if I've been hit once, and the next thing I'm going to do is I'm going to tell everybody around me that you cannot trust that channel because things can go wrong. So when things go wrong, what happens? Does the customer feel left out and ignored? What about the reporting processes in place in the country? What about the legal framework? Is it going to be bureaucratic, frustrating process where you tell me, go to the police station, register that things have gone wrong, make sure you have this in place before we can investigate. That is a big barrier, especially because, remember, financial inclusion is being driven through digital channels, including in the rural areas. So how are you expecting a 70-something 3-year-old to go and report to a police station that I've been defrauded through this channel, somebody has illegally connected to my account and withdrawn money, and yet you are not doing anything about it? You've not trained the law enforcement agencies on how to handle them. And then even worse, then you're just driving them back to storing the money under their mattresses, which is typically how they used to do it before. So that's one. Then the other thing is around questions around regulatory frameworks and how supervisory authorities are holding accountable not just financial service providers who are your registered banks, but SACCOs, which are the savings and credit cooperative organizations. Service providers that provide services electronically. How are you holding them accountable when things go wrong, when the service goes down, when the customer suffers, or when they fail to admit that things have gone wrong? For example, how many court cases have succeeded? Actually, close to none. So unfortunately, because there's a big dependency on some of these capabilities or some of these big organizations, then the governments of the day are not willing to take the right action to make them do the right thing. That's a big barrier, yeah? And then there's also the other barrier around education. So if I'm planning to drive financial inclusion through digital channels, then I need to take the extra step as an organization to educate my customers. Not to just tell them, sign here, and when things go wrong, if you did not sign here, the responsibility is with you. Have I taken the extra step to go down to the community and educate them? Make sure I'm telling them that these are ways in which fraud can take place. What am I doing around making sure that those communities that I'm very keen to reach to bank with me as a bank are also educated on cybersecurity risk? Because unfortunately, with a lot of dependence on the internet and electronic commerce, then no matter where somebody is located, they're exposed to the risks associated with cybercrime that's done through these channels, yeah? Then there's a bigger issue around identity theft. This one is more a cultural thing, where in the continent we trust people a lot. When you come to somebody in Africa, the last thing they will think about is that you're thinking of defrauding them. So if I come to you and I tell you that my intentions are right, I call you up, I tell you there's a problem with your account, give me these details, the first thought for majority will not be that this person is trying to defraud me. But the world is changing. So what are we doing about educating people and telling them that, verify before trusting? We say that a lot in our corporate circles, but we don't tell that to our customers enough, and even our non-customers. And then finally, the barrier around cooperation. We don't cooperate a lot. So because I am focused on making sure that my business looks like it's doing very well, when something goes wrong, I will be afraid of sharing with my competitor, and yet sharing with them will allow them to come up with a way in which we can be able to mitigate and also be able to come up with a collective, consistent message to our potential customers and to the community at large. Thank you.
Lovely. Thank you so much for painting the picture and really bringing it to the core of how sometimes our conversations on the institutional level can be at odds with what's actually happening in the sort of, or as we say, in Kenya, on the ground, where things can be very different. Thank you for that context. Let me turn to Mark, because you represent a local bank and you're going to give us a perspective. I don't want to say a Francophone Africa perspective, but it is from Francophone Africa, and he will be, in the spirit of inclusion, expressing himself in French, and I think Jean-Louis will be graciously interpreting for us. Do share with us your perspectives about some of the barriers you're seeing from your perspective in the bank in driving cyber resilience for financial inclusion.
Okay. Okay, thank you. Je fais en français ou en anglais? Okay, I will try to express myself in English because a long time I not express myself in English. The barrier, she told about education, but it's not on the side of client. but the another side is the side of CEO level. Yeah. You know, in the bank, cybersecurity is a new subject in my country, and few CEO knows the importance of this subject. He thinks that if I take one person for making security is enough to securize the infrastructure. It's not like that. So education is a both side. It's the side of client, it's the side also to the CEO of the bank. We meet a lot of difficulties about cybersecurity, and the heart of the strategy of the bank in my country is the financial inclusion. But financial inclusion without security is nothing. You know my point. And on this starting of this years, we see 5 banks we face of cyber attack and lose a lot of money. And what is the point? The first bank have received a cyber attack and lose a lot of money on this cyber attack. But this bank keep the information in this side and do not share with another bank and say that, okay, I meet some difficulties in cybersecurity. This is the information you can use to protect to your organization against this attack. And another bank, is not possible to say the name of the bank, but the bank B received the same attack and lose 7 million of euro in this attack. And after that, another bank. But when you see my strategy is financial inclusion, and my client say that, but you give me a product, you are not secure. How to be trust to your product without security? Is the case because one bank did not share some information to help the ecosystem to protect against cybersecurity attack. And we make a lot of money. The second point is the bank decided to make a lot of money to protect infrastructures and the bank. But we face to another challenge is the resource, the person we are to working on the cybersecurity. It's like you have a Mercedes, but you are the good driver to drive this Mercedes. And we make a lot of difficulties to develop cybersecurity, develop sharing of information. And nowadays in my population, my country say that the digitalization is a vector of insecurity and do not use really the appropriate the solution, the digital solution that the bank put on the market. That is a fact. Is a barrier in the cybersecurity in the inclusion financial in my country.
Oh, wonderful! You got through it. Wonderful. That's amazing. That's an interesting perspective. Let me switch gears to Brett for a second. While you are, MasterCard is offering services that are powering financial services, including digital financial services around the world. How are you seeing similarities and/or differences across, rest of the world and Africa insofar as this digitalization of financial services and cyber resilience measures that are taking root?
Great, thank you for the question. No, I think that's exactly right. You look at the entire, security ecosystem, and I think just listening to the conversation just here, I think it's really, really important that as the world, we look at, there's many different ways that a financial transaction can take place, and many ways of doing so. But no matter the method, no matter the we call multi-rail strategy, the idea is many ways of being paid. But no matter what, each way should have the same high bar for security and privacy baked into those solutions. So when we look to extending digital services and look to expand financial inclusion around the world, we need to make sure that secure inclusion is also part of that same conversation. It cannot be divorced or separated from what we're trying to do and what we're trying to achieve together on access and financial inclusion broadly. So it's really making sure that all products, all solutions have the same degree of security. I think it's important. And I think that comes into standards, right? So, making sure that whoever is providing that financial resource or service, they meet that same bar, so there can be a level of trust to what you're doing. It's not fair, it's not right that that the consumer bears the burden of a cost of fraudulent activity, loss of funds, or cybercrime, loss of their identity information. It should not be their burden. It should be on the burden of the technology provider, and it should be also working with the government and the central banks on what those standards are from a regulatory point of view within financial services. So it comes back to is we need the standards. They're important to be followed no matter the platform. Security needs to be baked into our financial inclusion strategy. It's just critical. And I think how we also get there is through also deeper collaboration. I think you mentioned, I think there's more we all can do together. And I think this is an evolution, but looking at how do we make sure that the financial services ecosystem is more secure? It's through strong public-private partnerships, and I see them in 3 ways. One, that you come together with a sense of trust, that you're all trying to achieve the same mission and the same purpose, and everyone's committed to that. And that sense of agreement of what we're going to try to do together. Second is the idea of mutual respect, that when we all come together, we all have different roles in the ecosystem, whether you're a regulator, a policymaker, a fintech, a bank, a payments network. We all have different roles, but we all have a place to play. So it's that idea that we all respect the fact that we are trying to achieve the same goal. And then last importantly is that regular sustained engagement. And that's something that takes time. It takes effort to build that trust, but doing that over and over again allows us to make progress in a couple areas. And I think it's a sustained engagement. Meeting regularly is important to that. Knowing who your partners are is to do this. It's also a divide and conquer ways. Like when you look at the work that MasterCard does with our partners, protect the broader, financial services as a critical infrastructure. We all come together. We contribute to solicitations. We can all contribute to what should be an instant reporting rules. We all contribute to what cloud security regulations should be to provide that perspective. And so together we can achieve it, but it does require that regular engagement.
Great, thanks. Jean-Louis, you have the Africa Cybersecurity Resource Centre trying to integrate a lot of these recommendations into a space that can have them, sort of effected. Share with us the perspectives of somehow these barriers are being overcome, or which ones you still see as ones that have not yet been understood by all the stakeholders driving digital financial inclusion.
Yes, thank you, Najira. Just a little presentation word on ACRC. ACRC is a not-for-profit public-private partnership that we have established 2 years ago after several years of work with the African financial sector since 2015. And we have noted that there are some functions that are really important for developing cyber resilience that were not present on the African continent, which are mainly the information and best practices sharing this way, and capacity building also, both for the financial institutions and the policymakers, because in many countries they struggle to regulate properly the sector, let alone protecting their own infrastructure. So we decided to build this public-private partnership. And as this type of services cannot be easily commercialized, this was the idea to create this not-for-profit structure. So this is just in a general word. So it is funded for the first stage by the African Development Bank, by a multi-donor trust fund that includes, that is called Africa Digital Financial Inclusion Facility. And the donors are the Gates Foundation, Agence Française de Développement, French Ministry of Finance, Luxembourg, India joined recently, and also the Women Entrepreneur Finance Initiative within the World Bank. So we have been, and this is the motto of the GC3B, been talking about development and resilience. And what is resilient in practice? Because what we are interested, we are mostly practitioners, so we want operational solutions and not finish the day with slides. There is a thinking that we have to have is that cyber resilience is about building bridges and not building walls. We have been trying to build walls around our institutions or organizations in the last 2 or 3 decades, and we have found out that, of course, it is not sufficient. So the thing is, when we have been building walls since 20 years, turning to be bridge builders need a different set of skills from your and a different mindset also. So this is the first thing. So the second very important point, we have different types of financial institutions here, global, African, or global, half global also for Standard Chartered, or national. Overall in the continent, we are speaking about more than 4,000 institutions. So the question is, how can we reach efficiently these 4,000 institutions? Because it is very important that the institutions share at the local level, of course. It may be useful in many cases, but what will interest BNI is to be aware of what is happening in Kenya or in Singapore or in London or in Zambia or maybe in Ghana, so that they can prepare in advance. We don't want to drive the car just looking at the mirror. We want to have a clear perspective that allows to get the budget, to change the things that have to be fixed in the organization, in the detection system, in the incident response, and so on. So this is very, very important. So very large financial sector and very limited human and financial resources. There are some estimates that say that there are something like 10,000 cybersecurity experts for the whole Africa, which is not a lot. Some estimate that there should be at least 300,000. And just to give you an idea, in the US, there is something like 700,000 cybersecurity experts, plus 300,000 open positions. So there is a lot of people from abroad, including Africa, that are welcome in the US, which is understandable. So very limited human resources and also very limited financial resources. At the continental level, estimates say that about $2 billion are spent every year on cybersecurity, which is what the 4 largest US banks spend also every year. So there is a big leverage that we have to build also in the financial dimension. And third is we understand that in many countries, the support that can be provided by the states, either at the legal level, at the incident response team, there are maybe only 15 on the continent, so that means that in 40 countries there are absolutely no solutions. There are many countries where they don't have national cybersecurity agencies. So as the financial sector, we cannot wait that all the policies and legislation have been passed throughout the continent. We have to act now to protect institutions and the customers, as you mentioned before.
Let me just jump in there for a second. So if we start with the continental level, with some of the markets that are more advanced in digital financial inclusion or digital financial services, are you seeing them leading the charge and sort of sharing best practices or good practices? Laura and I are from Kenya, the land of mobile money, that is obviously in development or held up as a poster child, but often enough we're not seeing the conversations about the downsides to when M-Pesa has been down or when there have been, user-facing harms that are very real. Are you seeing that sort of organic peer exchange emerging, or is everybody sort of still holding to their own perspective through the resources that you're putting together?
Yeah, this is a very good point. The thing is that trust does not come by miracle. You have to build the trust, and you have to create organizations, you have to create processes, you have to do a lot of pedagogy to explain. For example, if you say to a banker, oh, let's start an information sharing system, you say, oh, I have heard this many times. And they said, oh no, it's not the African culture. We don't share about this kind of things. But on the other side, when I meet all the people here at the GC3B, and we see that the practitioners, they are very aware of this situation. We have been talking about information sharing since in the last two days. So the question for them is not should we, but how can we do it? And this is where the ACRC approach is bringing some best practices that have been developed in financial sector, in the US, in Europe, for example, and adapt these practices, these organizations, these tools, these processes to the capacities of the continent. But we have the same issue on the continent, so it's quite unlikely that we can find a very different solutions. Why not just use the solutions that have been proven worldwide?
That's an interesting assumption, and I want to bring in Laura and Mark's perspective on this, because on one hand, there's a push, even in the theme of the conference, capacity building, and you've mentioned pedagogy, as this idea that there are all these best practices from more advanced markets, let's bring them to Africa and customize them. The challenge that is not often brought into that framing is that Africa's digital financial landscape is vastly different from the rest of the world, and Laura touched upon it. We have the mobile aspect of it that brings in the telecommunications sector. So when we're talking about digital financial services in Africa, essentially we're talking about both the traditional banking sector and the telecommunication sector. So a regulator today, or regulation actually in the country, in any country, will have to tie both aspects. I don't think other regions of the world, maybe with the exception of India and parts of Asia, have that going on. So how do we square the circle on talking about capacity building being a pedagogical aspect versus the perspective that is peer learning, so to speak? Because I'm wondering, from the perspective of people who deal with regulators, are they trying to be told by others how to do it? Are they asking what unique challenges you're facing in shaping the regulation? I'd love to hear both of your perspectives on this.
Oui. Comment tu vois ça d'un point de vue du régulateur? Est-ce que tu as l'impression qu'ils sont ouverts à ça? Est-ce que ça doit passer par là?
D'accord. Alors, at this time, it's better for me to speak in French and you will translate. Okay. In my country, regulator decided to put some ils ont commencé à mettre donc notamment des informations liées donc à comment chaque entité devra maintenir donc l'écosystème en ce qui concerne la sécurité. Et je pense qu'elle a évoqué le fait qu'aujourd'hui il y a donc les télécoms et les banques. Ce qu'on a aujourd'hui, c'est que le régulateur est beaucoup impliqué, mais derrière on fait face donc notamment donc à un challenge lié donc aux personnes qui sont capables donc de pouvoir mettre en place ces informations là.
Yeah, so the regulator today, as in West Africa Monetary Union, has started to develop the principles, the general principles, but they struggle having the right resources for the implementation and to accompany the different financial institutions. Right. And also, this is a comment from my part, but if regulation allowed to solve all the cybersecurity issues, we would know since a long time. So it is, of course, the regulatory input is important, but it is far from being sufficient.
Which brings a very good point that assumptions about capacity building cannot just be on training. They have to also look at whether it's availing resources to actually implement the ideas, the recommendations. I have been doing research on this across a number of markets in East, South Central Africa, which we often don't talk about. And across the spectrum, there are regulations, there are rules, there are guidelines. It is the resources to actually implement. Too often, capacity builders have come with a pre-packaged solutions, that it's a training program, and what people need is money to set up the emergency response team, or the research or exchange, information exchange mechanisms. But it's a very good point that Mark is bringing up. Laura, Mark has another point.
Alors, ce qu'il faut noter aussi, c'est que pour arriver donc à cette étape donc de régulation, il faut qu'on ait donc une cartographie donc des problématiques que les banques rencontrent sur la partie cybersécurité.
Yeah, they first need to establish or to have a view on the map of the different threats that the banks are encountering, and as he said, Mark said before. This has to be explained also to the general management. So they should be a real part of the pedagogy.
Et après ça, ce qu'il faut dire, c'est que comme les banques ne partagent pas les informations, il est difficile pour le régulateur donc, de pouvoir définir cette map-là qui permettrait donc, de faire une régulation assez poussée des problématiques bancaires. Du coup, on est dans une surface donc, de régulateur.
Parle bien dans le...
Okay. Donc, on est dans une surface où on n'a pas l'exhaustivité des points importants en ce qui concerne ce régulateur. Et l'un des éléments les plus importants qu'on a regardé, c'est que parce qu'on n'a pas ce partage, because you did not share some information, we meet a lot of banks facing to the cyber attack, lose some money. So in my country, regulator makes some decision, but it's very difficult for the local person working on the cyber security to take this information and to apply correctly on the system of information.
Right. Okay. No, but I think you have given most of the speech.
What am I answering?
So we're talking about how the perspective, you interface with the regulators, for example.
Yeah.
Are you seeing that the issue is only on the perspective of knowledge, know-how on these issues, or resourcing, or how are we squaring the circle around the capacity question that is the barrier between implementing what we know are best practices,
okay,
and them existing out there and bringing them from the rest of the world to Africa?
Okay, that's a tough one to answer, but I'll just paint a picture of what I see. So what's happening is, and I'm going to extend beyond cybersecurity because data privacy is also linked to cybersecurity. So for example, you'll see a lot of countries have rolled out data protection laws and regulations. And then they've also rolled out a few guidances on cybersecurity. But the question is, even when you come up with those guidelines, do you have the ability to oversight and enforce it as regulators? So that tends to actually be where the real problem is. And it's not because regulators are backward. Probably there are different priorities. Perhaps an ability to understand that while data protection and privacy is always often seen as a legal thing, you need to understand the technical angle and how a cybersecurity-related breach can result in a data privacy-related breach. And implementing privacy by design in a world that is digitalizing and digitizing requires an understanding of the technical side of things. So you have a regulator who has, and this is not specific to one country, but what I'm observing across the continent, who's come up with these nice laws and regulations that are heavily mirroring what's with GDPR. But how much time has been taken to train those that are supposed to enforce, to oversight, to ensure that there's a place where people can report to understand how the pieces connect? That's one. Now, moving away from that, there's a side about partnership. You mentioned about how we have a lot of dependencies on telecommunications, telco companies, and I'm going to move away slightly from Africa and speak about what I see happening in other regions. So I sit in the Association of Financial Markets Asia. Association of Financial Markets Europe, and SIFMA, which is America. And what happens there is all financial institutions and key players sit together and discuss when there's an upcoming regulation before it is published. So there's a lot of participation. For example, the Digital Operational Resilience Act, we've been having consultation since 2021, and it's a big conversation in the EU. Now, that Digital Operational Resilience Act has requirements around cybersecurity, around critical third parties, around contracting. We will be able to have our voice heard before it's published as law, so that it's pragmatic and it considers what does this mean for the entire industry. Same thing with some of the laws that are coming in from the Asia side, the conversations on Gen AI, artificial intelligence, and cybersecurity right now, even publishing joint papers with them. The challenge I see in Africa now coming back is that participation and inviting others to come into the conversation. I can tell you, for example, through the SIFMA forum, we had an exercise called Quantum Dawn in November 14th to 16th, thereabout, where we were simulating a cyber resilience outage that affected entire global markets because of a problem with a third-party imaginary brokerage firm. Now, that was a good desktop exercise, but it had participation from more than 250 institutions globally. That was quite big. We don't see that happening in Africa because we don't talk to each other. Even within the country, we don't talk to each other. So how am I to cooperate even with my international or regional partners when I'm not speaking with fellow banks in my country? So that is something that I think we need to think about. In the Quantum Dawn exercise, we had cloud service providers coming in. We had the US Treasury. We had brokerage firms. We had insurance firms talking together. That's a big challenge. So for me, that's something which I think for us to move the dial, we need to find a way where we can speak to each other and acknowledge that we're not speaking to each other. Because we can keep saying that we are cooperating, but if we're not cooperating, we are not cooperating, and we're not going to move forward.
Yeah. We're certainly not going to cooperate by talking at each other, that's for sure. And in the spirit of participation, I just want to see if the room will be ready to jump into the conversation before I bring back Brett and Jean-Louis. Now that we're talking about participation, we must start practicing in the room. So I need to know if there's early questions coming in so we can take stock of them. Great, I'll be coming to both of you shortly. Brett, Jean-Louis, in this topic, in this matter, what are you seeing? I mean, and Laura, you've touched on something there that's very interesting. There is a concept of governance that it transcends governments. It's gonna take a while before cultures and governments change towards and adapt towards the rapid pace at which digitalization is happening. What can help, and I'd ask this to all those who represent the private sector, how are you trying to engage yourselves as private sector or organize yourselves in operational sites? It could be a country context or a continental context to at least make sure there's that exchange, even if it's informal, without waiting necessarily for these formal processes to take root. Are you seeing creative friction? So anyone here can jump in. Brett, I see you want to go.
Sure, I can go first. Yeah, so on the governance frameworks, and hearing this discussion, right, I think that's right. The importance of collaboration and participation is just so key. I mean, you see around the world, there's a lot of activity that's happening, and we should leverage the best of those ideas wherever they may be originating, and that's really, really important. We shouldn't think of ourselves as having to reinvent the wheel every single time that country X or country Y do something. If it's a good best practice, if it's a good idea, we should definitely leverage that. And I think that's important. I think you're speaking about open processes. I think that's right too. Just to give you an example, in the United States, right now there is very deep discussions happening right now with the U.S. regulators and U.S. financial institutions on how are we going to address cloud within financial services. Yeah. And given that our sector is already heavily regulated in the traditional sense in financial sector, what are the implications for cloud security in that environment? And so right now we have 6 work groups underway. We call it the FISIC-FIBIC partnership, but it's the private public sector, all the regulators coming together on a really weekly, monthly basis in person every 3 months to tactically go through these to solve this and think through what's the right framework, what's the right approach. So I say that, and these processes are transparent, and a lot of it is everyone wants active participation here from others because it will make the product better. Just two things I would share that I think are important to that is, one is the Cyber Risk Institute. It's an entity that has come together to see all the financial regulations that are around the world, all the various frameworks, and how can we align. MasterCard, we're in 210 countries. We have, I think it's over 120 different regulatory processes that we have to be in compliance with. And we absolutely want to meet that high bar for security and privacy, but doing it 120 times, 120 different checklists is not really that efficient, nor does it give you the security you need. So CRI has come together to create what's called the Financial Services Profile. And it's an aggregation, a compilation of all the regulations and align. So if you comply with this one framework, it actually is in compliance with the 50 or 60 that it back ends to. And that's really important for coming together. And again, those things should be leveraged, and they're always being updated. So if country X or Y sees a challenge or sees an issue with it, please share it with CRI, share it with us as an entity that uses it. If there is a concern, let's work through it so we can align, versus doing something just completely different for the sake of doing it different. Yeah. And I know the CRI, the profile, has also now worked with the Cloud Security Alliance to now align those frameworks. So this shows you that that's happening. And the other framework I put out there is the Financial Stability Board, released in April. It's called FIRE. It's the format for incident reporting exchange. And it's an incredibly great format that, trying to get the world to align on incident reporting requirements, because what we're seeing now is almost a race to be first out of the gate. But it's the challenge is what are we really trying to achieve in those early hours of an incident? What needs to be shared immediately? What investigations need to happen? I mean, we see rules about what's a qualifying cyber incident, what's a high cyber incident. These definitions make a big difference in how you're trying to be in compliance, and share, and to quickly get that information to, certs and to, ISACs and to others who can disseminate those threats. So anyway, we have some rules that are 2 days, 4 days, 2 weeks. We need to come together on alignment and work with partners through collaboration to do that. So I think FIRE is a really good framework, in addition to the profile, that I think we should all seek to align to.
I just want one last comment, and it's just because I want to comment on what he said on FSB FIRE. We've been discussing that also in CIFMA, in the CIFMA forum. That's the America one, that brings in all the financial institutions. And the thing with FIRE is, and it's again something we can do differently, is while it's being discussed through FSB FIRE America, it is likely to be adopted by other regulators globally. So that's why it's important to keep track of what is happening in another area, because once it's adopted across certain markets, our clients are globally banked. From a security perspective, they will want to ensure that for them to invest in your country, even if it's in Africa, that you're compliant with some of these things and they can trust that their money will be safe. For example, if you're a bank. And I just wanted to just highlight that whereas the example may not be specific to here that you've given, it's very relevant because I see regulators adopting it across the board because the cyber resilience conversation is closely linked to financial stability for the entire country.
Yes, I would like to add few words on how practically should we develop the trust. So the first thing we have to have in mind is that information sharing in a closed network with peers has nothing to do with press communication or general public information. Each institution anyway has to manage this aspect, and we see unfortunately many cases where the institutions have been breached. They say, no, we have not been, but the hacker is just showing the customer data on some dark web places. So crisis management is something also the boards have to learn, and very often, more than often, it is underestimated. So the second thing, information sharing in this closed peer network is not regulatory disclosure. Each country has its rules, its laws. Each institution has to comply, so they have to do it. Sometimes it goes up to the regulator, and many times, more than often, nothing is coming down.
Yeah.
I don't know what are they doing with this information, but maybe doing some calculation of the losses. But few operational elements come down that would allow the institutions to change their detection and mitigation system. So the purposes are different, and so the way to work is different. Within ACRC, we have defined also many rules. We have a code of conduct that is very important for the behavior of the institutions and the people who are entrusted to share with their peers. So there is this code of conduct. There are operating rules that explain very precisely what you should share, how you are allowed not to share information, or you could have someone that is sharing for you on your behalf. So anonymity can be preserved. You are not obliged, of course, to share financial data. Did you lose 1 or 10 million? This is your business. But sharing the IOC, for example, as Mark said before, will be very valuable for your partners.
Okay.
So this is the kind of things that are important. We are using also some tools like the malware information sharing platform. This is a platform that is used by the European Central Bank. It is used by the SWIFT network, by the GSM Association for the same purpose within networks. So these are trusted tools that are comply to certain norms in information sharing. So this is absolutely robust. And the last thing is the information sharing should be create valuable outputs. For example, if you organize crisis simulation, the input for what is actually happening on the market is to be integrated in the attack scenarios you will be running with either the technicians, technical staff, or the management. So everything is linked.
Absolutely, absolutely. I think we have the first 2 questions from the floor over there. We'll take them, and then we'll see if there are others in the room.
Thank you for the insightful session. So my question is on getting fintechs to invest in cybersecurity. Mm-hmm. So I'll give an example of what I've experienced. So early this year, there's a fintech that was compromised, and they engaged us to perform a forensic investigation. So we did that, and we gave them a report. And then now in the 3rd quarter of this year, they were compromised again. So they brought us in. So my first question to them was, did you implement the recommendations that we gave? No, they didn't. So in this second investigation, we requested for a vulnerability assessment report that they had done previous year, the previous year, that is 2022. So they gave us that, and we went through it even as we performed the second investigation. And we realized that the vulnerabilities that had been identified a year ago had not been fixed. And it is through that particular attack vector that they were compromised this second time. So when we...
Can I ask, did they say why they weren't able to address it between the first and second times?
They kind of, not explicitly, okay, so to speak, but they always point to financial constraints. Yeah, but some of them were things that they could have done. For example, upgrading from one of the web servers that they were using was 3 versions behind, N-3. And they're saying they cannot move from that system. It's a legacy software, has been running for 10 years. But I was telling them, banks are able to plan for these things and do upgrades. So my question is, how can we get the management of fintechs to actually take cybersecurity seriously and implement the recommendations that security practitioners give to them. Thank you.
Thank you for that. We'll take the second question and then bring them back to the floor.
Thank you so much. My question was sparked by something that Brett said, but it's for the whole panel. It's on public-private partnerships. So you spoke about the importance of common goals for building that trust and alignment, but I was hoping that you could expand a little bit on the actual process of setting up those initial goals and how that can be improved and best done.
Great. FinTechs. Who wants to take on that wonderful little nifty monster? Are they involved in ACRC, for example?
Yeah, sure. Yes, because we can consider that unfortunately, for the vast majority of fintech, the maturity level is very, very low. Because these guys have concentrated on the user experience. Will the thing be usable by people in the back country with limited communication possibility? So they have spent all their money on that and then on getting customers. But the cybersecurity calls back, and we have a number of incidents, and it will be increasing because for hackers, it is very low-hanging fruits. So they will be devastated. And the good news is that maybe it will, if investors take this in mind, maybe they will concentrate their efforts on the institutions that can build robust infrastructure and robust applications. And for ACRC, we have developed a special program that is dedicated to raise the maturity of these microfinance, microinsurance, fintech in 2 or 3 years. And the first thing is, of course, the board being made aware of the issues they will face. I think Laura also has some inputs on the SMEs implication.
Could you share the mic with her? We only have,
Yeah, thank you. I think you've adequately covered it, but I think the question is always on priorities and financial budget. You will understand that fintechs and SMEs, from a budget perspective, they do not compare to corporates the size of multinationals. You cannot, it is not a reasonable expectation that they set up a SOC in place for the activities that they have in place. However, it's a question around even the leadership of the fintech. To what extent are they aware of, or do they understand the role that they play in the ecosystem? So here's where also partnerships will come in, because I would also expect the government to play a role, especially if these fintechs are integrating with entities that are critical to the stability of the financial system in the country. For example, I know in Kenya we had cybersecurity guidelines provided by the regulator, but after a while they changed it to be, it's not just a cybersecurity guideline for banks, but for payment service providers. Having recognized that the banks integrate to the telcos through the payment service providers, there are about 3 or 4 in number. And that then forced the payment service providers to invest in cybersecurity. So again, it's just an exercise of understanding the layout of the land and being able to interconnect the parts. Thank you.
As we sort of transition to Brett's response, I would also add that part of the challenge has been in how even the funding, the VC ecosystem that drives the fintech, surge, and especially on the continent, actually prioritizes that. And so the conversations we take on cybersecurity to VC panels and sessions is very, very important. And related to that is actually a conversation around MSMEs and even individuals, the sort of other ranks or the other side of the institutions and stakeholders who are affected by the cyber ecosystem we're existing in. Fintechs, because of the marketing they'll do, oddly enough, are in a very unique position to also be very good ambassadors for cyber awareness amongst amongst the public they intend to serve. But the challenge is that the incentives for them are to sell easy, quick. This thing is going to solve your problems while gobbling up a lot of data. So the incentives are to draw in a lot of stuff that actually puts people in vulnerable positions, rather than for them to be able to actually build with security in mind first, which means they move slower when VC money is asking for returns quickly. And so those incentives are quite perverse, and I would want to hold a candle for them, because they're not represented on the panel, that it's not as simple as them just getting a recommendation. It has also been very much about the ecosystem around which they're operating, compliance burdens from regulators that puts them in a challenging position. And I would say fintechs are a catch-all for all other microfinance institutions, SACCOs, and other actors who are actually serving the financially vulnerable. But Brett, over to the question that you were supposed to respond to.
Yeah, so as I listen to this conversation, I think we need to keep it, most important is we need to make sure that the end consumer is not harmed by whatever financial service is being provided to them, right? Full stop. It's about protecting the consumer and making sure that they are not vulnerable, that there's no fraud, because if a incident were to take place or they're frauded out or scammed, that erodes trust in the entire digital ecosystem. And that is not good for anyone, anything, given the economic benefits obviously it brings. So if the objective is to protect and ensure no harm to the consumer, on the back end of that is where the cybersecurity needs to be plugged in, at least somewhere in the supply chain. And as I said earlier, this is why the regulations or standards need to get to a point where that you meet that high bar of security, so the protection is there. There's many ways to get there. For example, like MasterCard, we have invested $7 billion in cybersecurity over 5 years, just showing you how much we're double downing on security solutions, not just about the payment network, but also, in addition to that, other cybersecurity services that can, and others, obviously compete in this sense too, but other services that can be added on into any kind of financial transaction or any other various types of financial services where you can then pull that in and make sure you have that degree of security. So what I was saying is at the end of the day, there does need to be security before the product is delivered. And the other thing I would say is important about small, medium-sized businesses as part of the supply chain. At MasterCard, we of course have so many third-party suppliers, and how we manage that is we have solutions that we have that it's called Risk Recon for us, but it basically is, if you're using the analogy, you're on the street looking across the street and assessing on the internet what small business, what entity, what third-party supplier of yours has broken windows, which ones their doors are not locked, and we'll have a sense and we'll score them saying A, B, C, D on their cybersecurity ranking. How risky is them being a part of our third-party supplier? So we can do that assessment, we score it, and then we track it and we follow up with that third-party supplier saying, if you don't meet, at least a B, we're not going to contract with you as a third-party supplier. So it's our way of checking our third parties, and part of the ecosystem supply chain with small businesses, that needs to be provided. So I say that. For small startups, small businesses, there are free tools out there. I know the Global Cybersecurity Alliance has them. I know WEF has done a couple of them. But really the idea is there are free, easy ways to do basic hygiene, basic risk management frameworks that get you a long way. It does not necessarily need to cost a ton of money for some of the basics.
Awesome, thank you. We've had a wide-ranging conversation that I will not try and summarize. All I'll say is that I hope that in Geneva we're able to come back and have a continuation of this conversation with lessons about what are some of the emerging good practices, and especially around information exchange that is not in the back channels that are not transparent and visible to all of us. With that, ladies and gentlemen, I thank you very much for joining us. Please do give them a round of applause and do follow their work, which is excellent work. Thank you so much and have a lovely afternoon.